Hi traders, and welcome to Pepperstone's Technical Analysis Market Watch on Friday the 4th of September. So we saw some big weakness on the S&P 500 and the Dow Jones last night. We saw them down around 3.5%, and some of the majors have reacted off pretty solid resistance points as well. So we'll check those out before non-farm payrolls tonight and see if there's any opportunities that we can get into before then and early into next week. So let's first take a look at the Aussie USD. This is a daily chart. We can see that the horizontal lines that we've got drawn here are basically just trapping the market where it was previous resistance. Here you can see that the highs that it reached earlier in the week. No surprise to see it sell off, especially after that doji type candle there. So look, it finds itself at that place of role reversal. Given that it's non-farm payrolls day today, we're probably not going to see massive movements in this particular pair, and probably for the majors in general, really. So it may gravitate a little bit lower to around this role reversal, which also coincides with the 20 moving average that you can see there. So yeah, definitely an important zone for it, but it's probably going to meander around this area. So if you are going to trade this one, it's probably more a scalping opportunity than anything else over the next 24 hours or so, and we'll wait for a bit of a trend to establish once the non-farm payroll results are out. All right, we'll move on to the US dollar CAD now. This one's had a little bit of a breakout. You can see that this is a 4-hour chart. I'll take it to a daily first. You can see that we had 3 days of not much movement. Like it rejected a couple of times from here. The stochastic isn't really in the overbought zone anymore, so or oversold zone. Sorry. So you can see there that it didn't even break below the 20. So you had a big daily move up. On the 4-hour, you can see it a little bit more clearer. We've got the lightning bolt effect that we always like. We've got the series of higher highs and higher lows. And we've also got the MACD in our favor. You can see that it's switched up above the 0 line now on the 4-hour, which is important. That tells us that the 12 and the 26 moving averages have crossed. And yeah, basically we've still got plenty of power to go up on it. So look, it's certainly reached its first level of where it's going to find trouble. We'll take it down, make it a little bit smaller. Okay, so you can see here that this is the first point of trouble. I'll draw a horizontal line there so you can see that's the support zone that has treated it fairly kindly, and then it was resistance there. So it tested it there and then just sold off a little bit. But now the good thing about this trade now, over the last day or so, it's moved well above the moving averages on the 4-hour now. Okay, so you can see that it's trading above them, so they should provide a level of support for them now as it comes back. And hopefully, if you are going long in this on this trade, it's going to give you a stop loss protection. So not a bad trade to be getting involved in. If it gets back to the pullback for around the 20, I'd like to probably see it. If you haven't already entered this trade, you don't want to be entering it too close to the resistance zone that's already touched. So you'd want to probably see a pullback either to around this level here, around that sort of 130, 77 to 80 zone, or even sort of around the 130, 85 to 90. It's around this level here. The 20 moving average will probably still be there. So if it sells off to there, maybe that gives you a reload zone. But again, with non-farm payroll, we just got to be mindful that we're probably not going to see big moves in the next 12 to 14 hours. So just keep an eye on that one. Probably scalp to that level if it comes down there, and maybe scalp it to the new highs again. The next point of resistance is going to be around this level here, which is around the 132.30 area. I'll draw another horizontal line there so we can mark that one up. So you can see the price was trapped in there a little bit. It was previous support that was resistance through this area here. So by the time it gets up there too, it is possible that 200 may reach that point. Probably not likely if we get a hard move. Like will take several days definitely to get that moving average down, because that is a 200 moving average. And although this is a 4-hour chart, it still does move fairly slowly. But if it meanders on up there and approaches it around this level here, so maybe in 2 or 3 days, the 200 will also be there to act as another level of resistance. But that's probably the main target for this one. When it does break through this level here, enter on a pullback around here, and aim for around that 132.40 area, which will probably see it find the next serious level of resistance. All right, we'll go to the dollar Swiss here. We're paying a bit of attention to the dollar-based pairs today because this is where the action is. You can see that on a 4-hour, this is also broken through the moving averages. I'll take it to a daily first. So it's done its best to absolutely test the 20 again. Has not been able to close above it. Okay, so this is a very key zone for it. You can see though that the last week of trading, it's certainly leveled up. The last 2 weeks, you can see, even 3 weeks really, all this price action here. This is a daily chart. So 3 weeks of action has failed to make a new low. All right, so it's been hovering in this zone of around It's up to about 91.77 down to as low as 90.15. So that reasonable 150 pip range. But look, what you've got is a 200 moving average that is failing to break. It's definitely found a serious level of support here. So it's failed to break to a new low and continue the downward selling. So yeah, we are expecting a bit of a reversal on this one. It's got to break above the 21st though. So this daily must close above the 20 moving average at some point in the future before we actually start attempting this to go long. We're not going to try and long this one until we get that daily close. It's got a lot of things in its favor. The MACD is rising, the stochastics is rising, but it's still, price action has to close above this 20 moving average in order for us to take this one long. And yeah, the logical zone is going to be around this sort of 92.80 area where I've got this horizontal line. That's going to be the first place of, I'll just pop that down a little bit lower. That's going to be the first place that it's going to find serious resistance. And yeah, but it's got a little bit of work to do before it does that. We'll take it to a smaller time frame, and you can see that the 4 hour is trying to make a series of higher highs and higher lows. This is the pattern that we want to see. You can see it's tested the 200 on the 4 hour. It's come back now. It's sitting on the 20 and the 50. So a bit of a reversal from here, and a break to a high. Yeah, we want to see a break and a close above this level here around the 91.50 area. If we get a close on the 4 hour above that, that'll give us the lightning bolt effect that we want on a 4 hour chart, and then we'll take it into the highs of 92.50. Okay, a lot of this is based around the dollar index. Okay, so we know this is painting a very similar story to what the Swissy is, actually the US dollar Swissy, and this looks very, very similar. Okay, so you can see that the last 3 or 4 weeks of action has been very, very solid now. Like you can see, it's only had a very small range compared to the selling off that it's been doing. So it's failed to break any lower than the 91.68, and it's sort of 93.71 was its highs, or 93.87 really if you go to the absolute highs. That's where it hasn't been able to get up there in probably the last 3 weeks. You can see that the last 3 weeks worth of action has not gone up there, but it has tested the 20 moving average nearly every day. Okay, this is a daily chart. Testing it again here, so you can see that it's touched the 200, the 20 moving average, sorry, sold off a little bit. It needs to close above this to convince us that this is going long and going to send the other US dollar based pairs along for the ride with it. So we must get that close above this 20. Is that going to happen before non-farm payrolls? Well, I'd be surprised if it did, so I'm not really expecting it. But certainly after it, it could certainly see the dollar strength return, and the dollar index could definitely get above this level. And if it does, you know, we're going to be seeing the 4 hour lightning bolt. You can see that it's setting up exactly like the US dollar Swissy. You can have the good move up. It's above the 20 moving average now. We want to see it find support here and then break to a new high above this level here. And then we've got the lightning bolt effect that we're wanting. MACD has switched to the upside here. You can see that stochastics has already sold off a little bit, so it's probably getting ready for a reload. It doesn't concern me too much. So yeah, this is looking not too bad. It's in the right place to send the dollar base pairs long if we get the switch that we need. We definitely need this close above the 20. Very, very important. None of the other price action is going to happen on the dollar base pairs until we see a close above here, and then we're going to see the Swissy and the CAD, more than likely fulfill what we looked at on the analysis just previously. All right, we'll have a look at the EURUSD quickly. No surprise to see it sell off from this level. It touched the 120 as we thought it would once it broke through that level. So that was a pretty good trading zone. It sold straight off the 120 though. You can see that it reached a high of 120 just, and sold right off it, gave us the shooting star. We've obviously got MACD divergence there. There's no question about that. So, and it's class A too, because it was a high higher peak on the price action. It came down and found support on the 20 moving average. That's no surprise because it's been doing that for a long time now. This is going to be one of those ones that's probably going to hover around this zone. I can't imagine it doing more than a 50 to 100 pip range today, and that's probably even at a stretch before the non-farm payroll comes out. Okay, so probably just keep an eye on this one. If you're going to scalp it, maybe scalp it into the 119 area. So there's probably a 50 pip opportunity on the way up. You can see it rejected on the 20 there, which is fine. And basically just wait and see for what it's going to do. to see if it is actually going to break to the highs again early next week, or indeed if it's going to start selling off. A lower high formed around this level here, and then a break to the low will probably signal a change of definitely will signal a change of trend on a daily time frame at that point. And yeah, then we're going to be looking for shorting opportunities. So, but until then, we're not going to be doing anything drastic on this one until next week. So we'll just wait and see, watch the price action in this 50 pip range in between this channel, and yeah, just take the scalps on this one. I won't worry about the pound USD because that's telling a very similar story. I'll jump straight into the pound odd though, because this one is providing a couple of opportunities that might be of interest for some traders. I'll just bring it in a little bit. You can see that I'll just make it stretch over. You can see that it's broken out of this range. It's done that. This is a 1 hour chart. I'll take it out to a daily to give you a bit of an idea of what we're looking for here. The moving averages are definitely congested. It broke down below them, but now you can see prices trading above both moving averages that we consider key, the 20 and the 50. That is going to provide, you know, a reasonable amount of support for this particular pair now. So yeah, the pound is still looking a bit stronger than the Aussie, and this is what's really, you know, pushing this one a little bit higher. The Aussie dollar against the US dollar is, you know, relatively weak. Even though the pound USD is selling off as well, it's not selling off to the same magnitude. So I think that the pound has still got more blue sky in front of it, and we've got a very clear target to go for on this one, around that sort of 183.50 to 184 level. So it's reached it before at these two peaks, so we've got a very clear zone to go for. What we need to do to actually get into this trade, though, obviously, is to go to a smaller time frame. We can take it to a 1 hour and look for the change of trend. I'll just quickly bring that up. So what we want to see, we've seen the big rejection there. That's not really, I don't really count that as a low. I want to see a little bit more price action than that. So realistically, yeah, you probably want to see a retest of this level, or at the very, very least, a bit of a pullback, and then trade the new high if you're not already in it. I know a lot of people already are in this, but if you're not, you've got to wait for a bit of a pullback. You don't want to be jumping on the moving train on this one. On the 4 hour, it's still, you know, you can see all of these rejection candles. This is why we liked it. We're getting the 20-50 moving average cross, which is obviously important, even on a 4 hour. MACD has switched to the upside, so the 12 is trading above the 26 now. So that's obviously good for it. Momentum is definitely strong with this one. So we want to see, you know, potentially a bit of a retest if you're not already in it, targeting around that sort of 183 to 184 area for a sort of medium-term trade to a little bit of a scalp. All right, the last one we will have a look at is the ASX 200, because this is probably the one that's providing a reasonable amount of trading opportunity. The S&P 500 sold off quite heavily, but that's still, you know, relatively high. I'm not really seeing any trades on that one. I mean, we'll have a quick look at the S&P 500 and see what happened. That's the weekly. You can see a very, very big rejection there. I'll take it to a daily. Big sell-off, okay, but it's not at a level, it hasn't really come back to a level where I would be interested in potentially taking this long, especially before non-farm payrolls. You can see this level here has provided resistance at this point here, and resistance all the way through here. If it happened to meander on down there, maybe you could scalp an opportunity long on it if it happens before tonight's event, but more than likely I'll probably just leave this one alone and just let this one play out. Let the results come out, and we'll treat this one as a watch and see. But yes, the ASX 200 though is a little bit different in that we might get a little bit more range out of this one. You can see that the that 6194 to 6200 has been very, very strong resistance for it. Okay, it tried to push up over the last day. You can see that hammer candle pushed it up, had a big buying day yesterday, but of course that's reacted completely to what the S&P 500 did overnight and reversed all of its gains. It recovered a little bit, but this is not open yet, and I would expect that it's probably going to be at its lows on the open of this morning's market. And when it does, if it does actually open down here, potentially we're going to see a really big engulfing candle that's reversed all of yesterday's gains. Again, though, this is being driven primarily, well, it was certainly overnight, driven by the S&P 500. So we need to make our own decisions on this one. I think that it could potentially test the lows of the 59.50, so we've got maybe a 30-40 pip range that could reach today, so we could definitely bounce off that and probably trade it up to the 6,000. So I think that 50 points is probably going to see this one out. I can't imagine it's going to have a really, really big day movement wise. It might start off a bit lower, but it's more than likely going to stay within a 50 pip to maybe 70 pip range, which is still a reasonable amount. It's still 1%, but at the magnitude that it's been moving over the last 2 days, that is a significant change up. So So a 1% is certainly giving you some chances to scalp it. But like I say, just be mindful that it is obviously the biggest news event of the month today with non-farm payrolls tonight. So yeah, we would expect that although the sell-off was pretty heavy, the days trading throughout the day is probably going to be, you know, fairly minor. So yeah, just sort of look for those 40 to 50 pip moves on this one. And yeah, if you get scalping opportunities on the smaller time frame, aim for those key zones. So I hope everybody's had a great week's trading. We've had some really good technicals this week, so hopefully you've been able to get involved in those and got some good pips out of them. And I look forward to seeing you all next week for the new trends after the non-farm payroll results tonight. Thanks, everyone.